I am Wayne Scully, a CPA and tax resolution specialist. Today we're breaking down a major misconception about tax payment plans. You might think the IRS and New York State work the same way when setting up a payment plan to handle your back tax issue. Well, they don't. The IRS gives you up to 72 months to pay off the debt, whereas New York State gives you 60 months or less to pay off the debt. And if you don't know the hidden rules, you could be paying way more in penalties and interest. Stick around to learn how to qualify, key differences, and how to avoid major mistakes when setting up your New York State payment plan. If you owe the IRS $50,000 or less, you'll likely be approved for a payment plan automatically. On the other hand, if you owe New York State and need a payment plan, you'll be subject to a financial review, and they only allow you between 36 and 60 months to pay it off. Unlike the IRS, which approves many payment plans automatically, New York State requires more documentation. Some eligibility steps include: number one, the tax debt must be at least $10,000 for longer term payment plans. You must file all past due tax returns. And I've seen this firsthand where clients haven't filed in 10, 15 years, and in some instances, they have to go back and file all those returns or explain why there was no obligation to file. New York State may require full financial disclosures, including income, expenses, and assets. The difference is they want to know that they wanted information even when you don't owe a lot of money. Approval factors include: if you have high income or assets, New York may definitely deny your request unless you put up a lump sum to pay down the debt. Well, this is true for the IRS as well, but in the case of New York State, they're very aggressive. Here's how to apply. Call New York State at 518-457-5434 or apply online via the New York State Department of Taxation and Finance website. If applying for hardship relief, submit Form DTF-5 financial statement. If approved, payments are auto debited every month from your bank account. If denied, you may appeal or negotiate. Now you might be wondering, what if I need more than 60 months to pay off this New York State debt? Well, in some cases it's possible, but it's not automatic. If on Form DTF-5, the financial hardship form, you can prove financial hardship, they may be open to allowing for a longer payment term. If your debt is $50,000 or more, they may extend the payments to allow you to pay that debt off in a longer span of time with the condition that you accept direct debit or a tax warrant. If your business owes payroll taxes or sales taxes, the business may request a longer term to pay if they stay compliant. So let's talk about mistakes that can wreck your payment plan. Biggest mistakes include: number one, not filing all your tax returns. Number two, assuming New York State approves plans automatically. Number three, ignoring high penalties and interest. Number four, missing payments, because that can lead to collections. So there you have it. IRS versus New York State payment plans just aren't the same. And knowing the difference can save you thousands in penalties and interest. If you need help setting up the right payment plan, schedule a free consultation. Link in the description of this video. And don't forget to get a copy of my book for free at www.getmytaxbook.com or amazon.com. 21 tax topics to stay compliant. Look out for the next video for more tips and tricks.